What if Bitcoin crashes to below 40K, even 30, 20, or 10K? And what happens to Michael Saylor if it does, as well as the entire Bitcoin thesis? So today we're breaking down some of the boldest claims from Market Mavericks, where the host debates whether a Bitcoin crash to 10K is actually on the table and why it might trigger a financial domino effect across crypto markets. So we will dive into that, as well as what effects Michael Saylor has on the market and what could happen to him at those stages. So stay tuned.
Feeling that meme coin FOMO kick in, like you missed out on Doge and SHIB and watching Trump soar to number 2? Don't miss your next shot at flipping the script. Flapjacks is more than a meme. It's deflationary, sticky, and community built with utility. Don't wait for FOMO to set in. Stack your gains now at flapjacks.xyz.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. You guys know that I am pretty much all in on Bitcoin, and because of that, I like to try to find the outlying information that conflicts with whatever my thesis is. And the bulk of the market at this stage is still relatively fearful. We hit some extreme fear over the last month. Down here, what day is this? On March 12th. And again, most recently in April, early April, April 7th, April 8th. So the main TLDR is that nobody really knows what's going to happen to the markets. I've heard this idea of an extended cycle. Usually we have this 3 years up, 1 year down kind of 4-year cycle. It could be 2 years up, 2 years down. We've seen that once. And also there could be unknowns in this cycle right now that we're in. What's going to happen with this because of these macro factors. So because of that, like the one thing most people are still bullish on is that Bitcoin will be here. I haven't heard anything saying that if there's more uncertainty that Bitcoin just blows up. But what I do want to cover is this 10K theory from Mike Malone here on the Market Mavericks with Scott Melker and Garrett Soloway. So what's interesting to know, like I said, this is why it's key to try to digest other people's narratives that are different from your own. So TLDR in here, Mike is the only one with this 10K bear case. Both Garrett and Scott don't believe that could happen. So that's kind of a good thing. It's like, okay, 66% of the people do not believe that can happen, but you do need to just be aware that there is a thought camp. There is a possibility, like anything is indeed possible. So if you have leverage, or like myself, you have loans, things of that nature, then you need to be able to cover those just in case. So like I won't be liquidated. I have BTC backed loans, but I also have the cash on the side to just pay those off. But what I would more likely do is just buy more Bitcoin at those prices rather than pay them off completely. I buy it if it's that low. But let's listen to his thesis, where that comes from. And he's tying it primarily to a bunch of different indicators, but they're all based off of the stock market.
Rated that earnings expectations were too high, they're healthy lower, the stock market's very bearish. The bottom line is some of my Bloomberg colleagues are shockingly bearish. I haven't seen this before. So for instance, Gina Martin Adams, our equity team, thinks it's potentially going to have a recession, which means fair value for the S&P 500 is 4,000. Now that's not a big deal, but it's a 1/3 correction. And I want to point out just a few charts if I can as I go through some of my wrap here, just for a few minutes. The key thing that's happening is this top chart here. That's the S&P 500 divided by the rest of the world. That number here, that level here, we were just a few months ago, was the highest ever. I just take it from 2005 and I show it just relative to the MSCI ex-US index. This trend line has been in place for 20 years. We are breaking below it. So that's a deflationary force. Same time, this is U.S. stock market cap to GDP. It was 2 times GDP just a few months ago. There's only 2 times in history we've had that, significant times in major markets. 1929 U.S., 1989 in Japan. I was somewhat involved in 1980 in Japan working for Japanese firms. They're still imploding. At the same time, this is deflationary forces just catching up to what's happening. Crude oil was already heading lower, and Chinese government bonds yields are already heading lower. Again, that's just me. I was trading these in Japan 30 years ago. The world is...
So just real quick, he's got 4 different metrics on here. So that's why he titled this as deflationary dominoes that tell him that like he's starting to saw a recession is coming. And I've heard this from other analysts as well. Some say we're already in it, some say it's still coming. And these are the different indicators that he's looking at that show this. And like he said, even this trend line going all the way back to 2005 that we just broke below. So this is all kind of unbiased data, but we don't know the outcome, but it is important to look at these other indicators, other things that do somewhat correlate to Bitcoin specifically.
Tilting towards deflation. We have a significant reason to do it now. The thing I want to point out is what's really changed is the companions have broke up. This is gold heading higher, and what was all heading up together was the S&P 500, Bloomberg Galaxy Crypto Index, Bloomberg Galaxy Crypto Index, and the S&P 500 are heading lower. This is what people have learned the hard way who bought all those ETFs. They are learning so far that they bought leverage beta and not digital gold. That's a fact. What's happening. What stops it is
that one is an interesting one as well. I've seen this in other charts and other analysts talk about this, how now gold has kind of broken away. So like you said before, we used to have not only Bitcoin's not on this chart, but he's got the Bloomberg Galaxy Crypto Index, S&P 500, and the gold spot. They used to trade together. When you look at this pink grayish and gold line. So they were going not completely together, but in the same trend. And then now you see that gold is just broken away completely. And this can be, again, definitely related to the tariffs. There's been news that China has been buying gold and other countries dumping our treasuries. And this also could benefit Bitcoin if that idea that Cynthia Loomis is putting out there to revalue the gold on our books. And then that could allow them to buy some Bitcoin. There's also been these bit bonds being kicked around as well. So it's not all doom and gloom just because the stock markets could crash or we end up in a recession. But you do want to keep this in mind. Like I said, you know, it's 66% of the people on this podcast are like, they don't believe it. But just because one person out of three doesn't mean you should just ignore it. You should just put it in the back of your mind and be prepared just in case. A pound, an ounce of prevention is worth a pound of cure.
Leverage beta and not digital gold. That's a fact what's happening. What stops it is a key thing I want to point out. This is something I published on yesterday. One of the best indicators that's worked for hundreds of years, the gold to silver ratio. It's above 100. I published this yesterday, got a lot of hits on it, and just pointed out what's significant about this. It's a sign of, it always spikes, almost always gets spikes when you have recessions. That's what you see magenta, it's breaking out higher. One thing that's notable, see this chart? I thought, Scott, you and Garrett would like this. That's unemployment. It looks like a bull market breakout to me if you look at it as a chart. That's unemployment rate. It's only, we talked about this 2 years ago. That's going to go to 6%. And that to me is what happened. It's a delayed reaction. So I just want to get a little bit into Bitcoin, and then I'll leave it there, and I'm sure we'll have a lot to talk about. People have been pushing back a little bit on me and Mike just point how Bitcoin's going to have a normal mean reversion. I'm pointing out here is 200-week moving averages of Bitcoin and the S&P 500. They're basically the same. They're still heading higher. It's still a bull market, and they're just heading back to those moving averages. Guess where they are right now? It's a Bitcoin to S&P 500 ratio about 10 to 1. That's the about Bitcoin 200-week. I'm sorry, this is 200-week moving average is about 4,600, and the 200-week moving average in S&P 500 is about 4,600. Our team in equity says the fair value for S&P 500 in a recession is 4,000. So this is part of my reversion. They trade together. They're the same chart. And then
So real quick on that one. So he's saying that right now, like he mentioned in the very first part of this, is that the S&P could trade back down to 4,000. And right now it's at about 4,600, I believe. And he'll get into this later, but the correlation that he's saying is that they trade tick for tick, that you can kind of see this overlay. Again, these are not exact, but this is what the analysts and people in this camp use to make decisions that are non-emotional. So if there's been a 10-to-1 correlation and then the S&P trades back to 4,000, well, then that could put Bitcoin automatically at a 40,000 price target. And this over what he's showing over here is kind of like the fair market value. So even though right now BTC is sitting at 85, 87, somewhere there, so like 2x of the 10-to-1 ratio, he's saying that this is what it's worth, like the fair market value of what it should be trading at, and the rest is kind of speculation leverage on top, so to speak.
So this is part of my reversion. They trade together. They're the same chart. And then I also enjoy how people push back on my call for 10,000. I'm really sorry. That's well below their profit market. But this is one thing you have to get for someone who's completely unbiased in markets. I've done this for decades and just point out what usually happens. So if you look at the S&P 500 overlaid with Bitcoin on that autocorrelated chart, this is not me correlation. This is just an autocorrelation market. If the S&P 500 gets to 4,000, what I show you here is the high volume price. This is market profile. I used to trade by these things, made a lot of money, lost a lot of money trading this. It just shows since 2017, which was the significant year for Bitcoin. That's when futures were launched. That's when people like me could start leveraging. The high volume price is below 10,000. The average price in 2019 is below 10,000. Normal reversion means unless that crypto can way outperform the stock market, which notably it has been, Scott's been pointing out a lot lately, it has to. So I'll end with this one chart. This is not me again. This is, I'm trying to play a little plausible deniability with my outlook, which is just normal reversion. What you see in orange, it's a Bitcoin specific driver indexed out by a bunch of real smart PhD people at Bloomberg. I don't even know how they did it. I read it. It's overlaid with the Bitcoin to gold ratio. It trades tick for tick until Trump is elected. Right now, with Bitcoin gold about 25, it shows fair value is below 17. That's just
so got it there again. This is all his thesis and data to support that Bitcoin could go much lower in this cycle if negative market conditions continue to push forward. So he's saying right now 17K, and then eventually if the stock market trades down to 4K, then, or the S&P 500 specifically, then that puts Bitcoin at a 10K price. So personally, I'm in the camp of what Gareth and Scott will say later. I don't believe that that's possible. But again, it's just important to keep that in mind. I believe if that happened, man, there will be a lot of things breaking at that point. That Bitcoin at 10K will be the least of your worries. Like, we would want to probably reevaluate a whole lot of other stuff if we got to that stage. So let's get to the thesis from Garrett and Scott, kind of the counter argument for that.
Corporate profits, because the whole reason a lot of firms in this country offshore was for profits, been down.
So Scott, tell us why that's insane. Tell us why.
First of all, I'm looking at the chart. And so first of all, taking the Fibonacci levels from the March 2020 lows on the SPX, 4,000 makes a lot of sense. just in Mike's defense, that would simply be a 38.2% retracement. You would usually see that using Fibonacci levels in any market. And if you actually look at these, they've played out incredibly well. Look at the 23.6 was exactly where that January 22 high was, also exactly where this low has been so far. But that would be 41.45 would be retracing. The thing I question about what Mike is saying, last time we were around 4,000 on the S&P, I mean, we were at just under 4,100 in October 23, certainly at 4,000 in May of 23. Bitcoin, that's when Bitcoin was consolidating in the 20s, at like 25. It hasn't been 10 since way before that. So I mean, literally the bottom was 15 and 22. So
real quick again on that, to break that down, Scott is saying that yes, based off the Fibonacci retracement that a lot of TA gurus use, that a 4K S&P 500 value is possible, but the last time we got there, we've seen the 4K value was in 2023 and 2022, that time frame, and that's when Bitcoin was at the lowest, was at 20K. And again, that's also prior to this most recent halving. So he doesn't mention that, but I'm throwing that bone in here for you guys. So let's just use devil's advocate. If that was the low, or the correlation for the S&P 500 at 4K was putting Bitcoin at 20K in that range, and this is before the halving, that's when the Bitcoin was giving out 6.5 or 6.25, whatever it was, 6 and some change BTC per block. Well, when you cut those rewards in half, you also double the price. So theoretically, to me, that puts Bitcoin at a low if the stock market traces back to that 40K range that I was saying. Now, by far, I'm not the guru. I'm not the smart one in this bunch. That's these guys. But that would be my absolute worst bear case scenario, is personally me seeing a 40K Bitcoin. I don't believe that's going to happen. I believe we'll hold the 2024 highs around that high 60 range. But just my 2 Satoshis on that.
I just don't see that. I didn't see it necessarily on your chart, but I mean, the last time that Bitcoin was 10,000, that was in 2020, right? So I mean, you're talking, that's SPX all the way back here at 3,000. So I don't see that. I just don't see the S&P 4,000 being Bitcoin 10. Maybe I could see the argument then that it's Bitcoin in the high 20s. I also don't think that's happening. Also, I think that this year, at least, Bitcoin's has not been 3x the volatility of the S&P, and certainly the last few weeks.
I think that's far more volatile. Scott, I think you're making a good point, is that at least for now, Bitcoin is not having its normal correlation of magnitude of fall with stock.
For gold either. It's just going sideways. So that's a good thing in my mind. But yeah.
Well, just want to.
Now, what is the worst case scenario with this for Michael Saylor? So I had to pull this into Croc to get some better understanding, because couldn't quite conceptualize what Saylor was doing, because the way that he's done this is he doesn't actually have BTC as collateral, meaning that it automatically gets liquidated. He's using these 0% coupon loans, basically, where he's either selling MicroStrategy stock kind of like at a future price that he'll owe this back to people, and or getting a cheap loan from a bank based off of the evaluation of his company. So there is debt, but there's no interest on those loans. So what the margin call idea that exists is actually very little likelihood. So his loans work in 3 different ways. Convertible notes, these are loans that can turn into a company's shares later. Some have 0% interest, so they're cheap to borrow. They don't usually have strict rules that force Saylor to sell Bitcoin if the price drops. The preferred stock, these are like special shares that pay 8 to 7% interest. They're riskier because strategy has to keep paying the interest even if Bitcoin price fails or falls. And there's no forced sale. And Saylor loans don't seem to have tight rules that make him sell Bitcoin right away if the price drops. But if the Bitcoin price falls a lot, strategy might struggle to pay its debt or borrow more money, which could force him to sell Bitcoin. So that's the key, is this piece right here. They don't have to actually sell. Remember, they actually are a legitimate company that sells software and products, and they're building on top of Bitcoin. So there could be other things that they are in the course of creating now, or that they're selling in the future, that add more value to their books. So they could borrow money, or whatever it is they're selling could be enough to pay back these loans. So in theory, right now, he's borrowed about $7.2 billion in debt, and that's what he owes. So there is a potential price where BTC drops so low, in this case it's below 10K, because he has about 530,000 Bitcoin. That means he doesn't have, even if he sells the Bitcoin, doesn't have enough to cover the debts. But there's nothing that says he has to sell the Bitcoin. So the main TLDR here is there's not potentially a black swan event that just makes Michael Saylor get liquidated like we see in leverage plays, because again, he's a company, he has cash on the balance sheets, he has things he can borrow, and he's actually selling things as well. And who knows, somebody else could offer to buy him out or absorb the company. You know, they could merge with somebody else. Like, there's so many things that could potentially happen before we get to this. And I think his current average price is 66K. I had that somewhere in here. I don't know where that is, but yeah, here we go. 66,000 per Bitcoin. That's his current price. But again, nothing means he has to sell if we break below 60K. That just means he's not in profit anymore. But there's nothing to say that he can't borrow more money or anything like that to pay back the loans. All he has to do is make the interest payments on the loans. That's the minimum, and that can be done by the company assets and whatever it is they're selling. So the main TLDR with all this that I want to bring up to you guys is to always look for conflicting information from whatever your core thesis is, so that you're not living in echo chambers. You don't have to, you know, value it the same, but you should look into it to just understand what's out there, what is the other side of the story, because you never know what could happen, and you want to be prepared just in case. So like for me, I don't have that much leverage. There's maybe $3,000 worth of loans that I have across Ledin and now with Coinbase, and I have the cash to pay that back. So in the event that, let's say, Bitcoin dipped, and I think right now my margin call price is like 40K. Well, if Bitcoin dropped to below 60, I'd buy like $1,500 worth to cover those loans. And if it dropped again at 40, I'd buy another 1,500K. So I would just continue to add Bitcoin to that versus paying it off. And by the time that happens, I would actually have more money as well to pay off the loan. So using the collateral and leverage in a way that I've calculated that I can afford to pay this back if need be, as well as still accumulate additional Bitcoin. So that's kind of what Michael Saylor, I guess, has done, but on a much, much, much larger scale. So let me know what you guys think. Do you believe in the 10K narrative or 20K, or like in my thesis, 40K, or are we still going up from here? Like, actually, we have not invalidated the bull cycle. We're still above the 200-week moving average. I had pulled this up, this trend line. We're back above it. We've dipped below before. This is the 200 EMA, and this is the 200 SMA. So we're right around there and trending back upwards. So everything from a Bitcoin thesis is still on track. Oh, one other thing I forgot to bring up is the miner costs. So there is a point where if Bitcoin falls below that, the miners themselves would actually have to, would not be profitable, and we lose some of those miners and the hash rate. So that's the critical price point, is 30 to 40K, where many miners, especially those on older machines or higher electricity costs, would start losing money. So there's a security risk of the network that it makes it, I'm not gonna say impossible, but very difficult for Bitcoin to fall below these prices for a sustained period of time. That's what the halving rewards do. And of course, if you can find cheaper energy that's almost free, then yeah, you can afford to drop to lower prices. But this is kind of the absolute worst case scenario, and that also ties into the fair market value that Mike was showing, and that is shown on one of these charts over on BitBo that I cannot find right now, that shows the actual fair market value. But it is in the 40K range somewhere. I'm not sure where that is right now, but it puts everything at that price point basically. So keep that in mind whenever you're looking at your Bitcoin thesis and making decisions, and invest accordingly to your risk tolerance and expectations, of course. So I'm personally still in the camp that we're still going to go up from here. I do believe that the cycle is a little more extended. I don't know about when it will top out. It used to be that it would be sometime around third to fourth quarter of this year. Now it feels like it may be kicked down the road to even 2026 sometime frame. Or we could be in this extended 2 year up, 2 year down, and now we're just going to chop around for 2 years in this 70 to 90K range for the next 2 years. I have no idea. But either or, the answer is simple. Stack sats, stay humble, touch grass, don't sweat it. All right, smash that HBO special, brother. Like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See ya.